We're 2.5 hours into trading on Tuesday, December 14th. Hello, traders. Got a lot of great stuff to cover, but first of all, I'm going to make a statement. I can't even watch my own YouTube videos without being pounded by these gurus. I wouldn't trust any one of them. So, skepticism is very, very healthy when it comes to research and trading ideas. You should be skeptical of me. Every day I try and post actionable trades, not some photoshopped P&L. I'm showing you what looks good. I'm teaching you the system every day so that you can see it firsthand. I also try and validate everything that I tell you in the videos by going back and looking at timestamps. Who does that? So before we take a look at yesterday's picks, look at what I had to say to my members today in the chat room. These comments are also available on my Twitter feed and on my blog. Those links are in the description of the video. So hopefully some of you have been taking advantage of that. Before the open, this is about 20 seconds before the open today. This is Central Time, 8:29. I'm going to scroll right down to the day trading section. Day traders should look for an opportunity to short early today. And I talk exactly why this is going to pan out, or at least we're going to be watching for it. So I'm looking for a bounce right out of the gate this morning. When that bounce stalls, that's when I'm looking to get short. I believe the low of the day is going to fail, and I believe that we're going to fill in a gap from a few days ago. Once that bounce runs out of steam, there'll be an excellent shorting opportunity. If we're able to take out SPY 468, sell stops will trigger and the gap down to 460 will begin. I continue to scroll through my chat room because I'm giving a play-by-play. This is the bounce we want. Blah, blah, blah. Continuing to scroll down until we start actually getting into some shorting opportunities setting up. And I'm trying to get down to that level. I'm sorry, there's an awful lot happening in the chat room before that, but you'll see that we start taking a short, we start adding to the short position. I'm going to cut to the chase. We made a 15-point gain on that S&P move lower. And yes, it was exactly what I was looking for. What do we do now the rest of the day? I just left the chat room to tell everybody I'm going to be recording. Look for one more push lower. Should last probably another 30 minutes from right now. That will establish the low of the day, and then we're going to spend the rest of the day sideways, compressing. Why? Because we have an FOMC meeting coming up tomorrow. There's a lot of uncertainty right now. It's another reason that I felt that this market drop today was very possible, in fact, likely. But asset managers are not going to take any big positions into that number. If they needed to reduce risk, they've done so this morning. We have a hot CPI, hot PPI. That's going to also make asset managers nervous, but they're going to wait and see by this point in the trading day. So, not a lot of positions being put on. We also have a quadruple witching this Friday. So that's going to create at least one day of volatility this week. That's another reason that I felt that we might have a nice, decent pullback today. So those are all factors, but now I believe we're going to start settling in. You can see the tiny bodied candles. So the selling momentum has waned. We'll establish the low and then we'll bounce up. We'll pull back. We'll bounce up. We'll pull back. It's probably going to be around that 460 level, maybe 460.50. So there will be some opportunities to play stocks with relative strength, some opportunities to play stocks with relative weakness, but most of the action for today is done. So today's picks that I'm going to show you are nice picks. We'll look at them, but I think that you're just going to see choppy trading. So I really wouldn't look to take any overnight positions ahead of the FOMC. And I think the day trading opportunities are going to be fairly sparse. You're going to have to be very, very selective. We'll have one more decent push down, perhaps even by the time the video is over. We should see that low. I'll be looking for a long red candle followed by a bullish engulf, maybe a bullish hammer, and that will signal that we have retraced and filled in the gap. So let's get to yesterday's picks very quickly. Ford Ford was one that I really liked. You can see how the stock was so strong, breaking through horizontal resistance. Everything looked great. This stock was closing on its high of the day Friday, off to the races, big breakout. So we're going to wait for the market to pull back because we do not buy market gaps to a new all-time high. We don't do it. I told you not to do it. Market pulled back yesterday. Ford, I would have liked to have seen it dip a little bit, find some strength, and then start inching its way up. That would be a sign of relative strength. Instead, what did we get? Heck no. See you later. Big selling. Get a little bit of a bounce late in the day, but that is some strong selling pressure, and we did not preserve the halfway point of the long green candle. And I had pointed that out in my video that I posted before the open. Here we go again. Before the open, everybody had a chance to evaluate this stock, look at the stock, compare it relative to the market. There's your compression. You can see right there. There's your beautiful breakout. And then that halfway point failed. Well, that halfway point also happens to coincide with horizontal resistance. It had to hold and it didn't. So as it's coming down and coming down, you needed to stay away from this stock. Today, we're seeing follow through. If we break through the lower end of this compression right here, this stock is probably going to head lower. So Ford has shifted gears, pardon the pun, looks pretty dang weak today. And you can see trying to make a new low of the day, just like the market. The other pick I had was LUV. Well, geez, Pete, if you give me a long and a short every day, you're going to make money on one side or the other. Well, typically, I've been able to make money on both sides of the market, regardless of what the market is doing. Those stocks behave because we're trading relative strength and relative weakness. And there you've got LUV gap down below prior day's low. See you later. Very, very weak. Put up the SPY overlay so we can see what the stock did. There you can see how the market came in from the high, gapped higher, sold off. That's why we don't buy opening gaps higher, at least not near an all-time high. By the way, if the market has formed support down around the 100-day moving average and we gap higher, that's a gap and go that I will buy. So it's important to know where you're getting those gaps in relation to the longer term chart on the S&P 500. So in any event, really nice shorting opportunity on LUV, and you can see how even though the market recovered, the stock barely did. So decent short. Here we go. There's your new low on the market. This is a bearish trend day. I am not looking for any decent market bounce until at earliest the last hour of trading today, probably even just the last half hour of trading. Let's take a look at that daily chart. What clues was I picking up on? And this is just classic program type trading as well. When you've got a lot of buyers who are lined up in one particular area, it sets up for vulnerability. So let's go into a 30-minute chart so that I can describe what I saw unfolding this morning. First of all, hot PPI number, market has a negative reaction to it. So we come and test this horizontal support level, which you can see that was a high. We gap up through it, continue to go. So this was resistance, now is support. But just above that level, touch, touch, touch. We've got lots of touches. Oh, so what? What does that mean anyway? That means bye, 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 bye. This is where buyers are coming in. And you're always taught, hey, we need to buy low and sell high. We need to contain our risk. We need to keep our stops tight. So if I buy here, I've got nice upside to take profits on. If I buy here and the low fails, then I've got a nice tight stop. Hey, this was support before. I'm going to buy here. Got lots of upside. Okay, great. Hey, I've got support nearby. This is great. I'm going to buy here. Keep my stop tight. Well, these programs know how you behave. and they know that there are buyers stacked up here, so they are going to try and flush you out. Sometimes when they flush you out, you'll get a long red bar, the washout, and that long red bar will instantly reverse. So you get a bullish engulf, and then you're back in the range. Well, that's when you know that that move simply took out the stops. That's all there was to it. Now, if you take out the stops, long red candle, you've got follow through. Now you know that that was more than simply trying to trigger sell stop orders. So sell stop, because these are buyers. That means they have a sell stop below that entry point. Well, as I mentioned to my members in the room this morning, said we're going to get a little bit of a bounce, and I believe we're going to get that bounce right in here. Look at that, 3 long green candles stacked. We get the bounce, and I said this is the critical bar. I don't mind a doji here, but I want to start seeing some red candles that start retracing into this long green candle. If we get through the halfway point, we're going to know that this bounce is in jeopardy and that we should be shorting. This is where I started to short. I got shaken out of that short on this move right here, and I ended up stopping out for a small gain. But I really sensed that I was on the right side, because you're not typically going to get a bounce like this and an instant retracement all the way back down without taking out the low of the day and making a new low of the day. A more typical pattern would be long green candle stack, come back to the halfway point here, spend some time, and then whoosh, next leg higher. When you start getting a fail on this long green candle at the open, that is not a good sign. That is very bearish. So I saw this inverted hammer, bearish hammer. This is where I started to load back up on the short, and I took profits in here of about $1, took profits here of about $2. I wanted to make sure that I was capturing those gains on the S&P 500, because I'd already been flushed out of a good position once. Actually had a 10-point winner in here, but I was looking for much more. And I knew that if we took out that low, we had a chance to really go down. So I was willing to risk it. I reloaded, was still able to make excellent money on that trade. So that's the setup this morning. Those are the types of candlestick patterns you should be looking for. Once you get red candles like this stacked, you know that the momentum is strong in that direction. And this would have been a flush out right here, and you would have seen an instant long green candle the other way. That would have told you that this is simply trying to trigger sell stop orders. It's a fake breakdown. But when you get follow through like that, you know this is the real deal. This is another thing to watch out for. When you get one candle like this, just a solo, long green candle, and there's no follow through to it, it gradually starts to give up gains, then you know this was simply to shake out bears, simply to spark a short covering, which is what it did. And it looked like it was going to have follow through. This candle started to reverse hard towards the last minute before it was formed. So it looked like you were going to get 2 stacked green candles here. Ooh, hey, looks good. You got to wait for these candles to complete, because they oftentimes change in the last minute of trading. That is some S&P 500 technical analysis that I wanted to share with you. S&P 500 is one of the most difficult instruments to trade. It cost me tens of thousands of dollars in losses and many years to figure it out. There's a much better method. Yes, my skills, knowing what the market's going to do, definitely help me. There's no question about it, because that is the basis for everything that I do. So now that I know I'm looking for a market pullback, I want to be finding stocks with relative weakness. One of the shorts that I was in this morning was Microsoft. Now, it does not set up well on a daily chart, because you've had strength. Microsoft is one of the strongest stocks around. You did have an upward sloping trend line here that was breached to the downside, so I felt okay shorting it, knowing that that 50-day moving average was going to lend support. Some of the weakest stocks that you're seeing today are some of the high flyers. So I would not carry an overnight swing on these. These are strong stocks. There's profit taking. This is a temporary move lower. Ideally, if I'm going to be swinging a stock, it is already going to be showing longer term signs of weakness. But a lot of those stocks, the price action is very compressed, so you don't get those big whoosh, those big air pocket types of moves like we're seeing today. So if you can find some of these stocks that have been high flyers that are really reversing, you've got a nice upward sloping trend line, maybe you've got a major moving average that has failed, those would be good candidates. But if I'm going to swing trade from the short side, this is what I want. Earnings after the close, big gap down, spends a couple of days trying to consolidate, and then whoosh, there's the next leg lower. Now we breached the 100-day moving average, and the selling pressure is on. Get a tiny little bounce here through the 200-day moving average. Classic bear flag formation, upward sloping trend line. There's the next leg lower. This is why you do not want to be picking bottoms. Everybody's always so anxious. UPST, oh, it's such a good stock. Oh, I love this company. Oh, look at how high it was. It's going to be bouncing here. I got to have it, got to have it. This is just profit taking. These are shorts who have been short up in here who are saying, hey, you know what? I'm pretty happy with my gains here. I'm just going to take some profits. They goose it above the 200-day moving average. The programs know this is going to attract a lot of attention. And there are going to be a lot of people coming in to scoop up a stock like this because it's so cheap. And then you get your next leg lower. This is why we want to be shorting stocks that are in the lower right-hand corner of the chart, and we want to be buying stocks that are in the upper right-hand corner of the chart. You want to have that tailwind working in your favor. So UPST looks like a good short to me through the 200-day moving average. It still has some room to come down to probably about this 105 level. So, and you know, by the same token, people look at a chart and they go, "Oh, I can't buy that here. It's too rich. I feel like I'm already getting in late to the game." Here, big run, UPST, downward sloping trend line, breach to the upside, bullish flag formation. I can't buy it here, Pete. It's too expensive. It's already run so far. Okay, don't buy it. I'm going to buy it here, here, and here. See you later. I'm out. You could have looked at this stock back in here and gone, oh, breakout here. Oh, this is nice. Yeah, just can't get long in here. No, it's run too far. Look at that upside that you missed in the trade. Buy in the upper right-hand corner, sell in the lower right-hand corner. Those are the patterns you need to be looking for. You need to find stocks that have clear, defined price action, predictable price action. Gets on a trend, very nice. Gets on a trend, very nice. Forget this herky-jerky, choppy, all over the place type of chart. Forget it. Keep looking. You need something that you can look at a chart and say, yep, I think I know which direction this is going in. So let's take a look at a few other charts in here. Google, resistance here, lower high right there. So it's starting to test that 100-day moving average. Yeah, if Google breaks down here, you've also got an upward sloping trend line right here, and it is starting to touch that. Let me draw that in for you. GTC, we'll click on this bar right here, and we'll click on this one right here. And it's already breached it. So we're already through that. Now if we get through the 100-day moving average, we know we've got the potential for Google to continue lower. But Google's a generally strong stock. You can see how it's been able to hold up very, very well. Another point, when Google, Microsoft, Amazon, Apple, Facebook are all having a bad day, there's not a very good chance that the market is going to have a sustained rally, because those stocks comprise about 23% of the S&P 500. So they're important to keep an eye on. Adobe, nice breakdown through the 100-day moving average, testing that horizontal support. Yep, looks like a nice short, got room down to the 200-day moving average. NET, love it, see you later, through that 100-day moving average, room down to the 200, also decent short. Costco, I like this stock. I think this stock is going to be a buy on the dip. This is the kind of stock, yes, I know, I said, hey, the stocks that have the greatest amount of rally in them are going to present the best shorting opportunities. And this is no exception, but I think a pullback in this stock, it is a retail stock. I think this is going to set up for a good out of the money bullish put spread, selling below the 50-day moving average. I like Costco. AVGO, nice big flyer after earnings coming in, likely to fill in some of the gap. But you can see here that this stock has not made a monster move. It's made a nice move and it's compressed, so it's not gotten too far ahead of itself. Don't think the stock has great option liquidity, but as it comes back to this breakout here, if you've got a chance to sell a 575, 570 bullish put spread that expires in a few weeks for a dollar credit, yep, I think it's going to find support right here. We already looked at Microsoft, NVIDIA. NVIDIA's been a super strong stock, but you can see how it's taking out this horizontal support here. If it gets below the 50-day moving average, it's going to fill in that gap right there. So I think that you've got some downside room for this stock, but not much because you're right on the 50-day moving average. Once it breaks through that, you've got a chance to get down to the 100-day moving average. So I like NVIDIA as well. If I could sell an out of the money bullish put spread on NVIDIA, keying off of that 240 level at the 100-day moving average, sell a 240 put, buy a 235, do that for a dollar credit, keep it inside of 3 weeks. Yep, I think that's going to be a good one. Let me spend a minute on the Fed. I think tomorrow what you're going to see is you're going to hear the Fed saying, yes, strike the word transitory. Inflation is persistent. We're going to accelerate our tapering, but we're awful worried about this variant. Omicron could hurt the economy. We're seeing sluggish job growth. So we're still worried about economic conditions. We are not going to be tightening anytime soon. That's the message you're going to get. You're going to get a nice little relief rally. It's going to last probably until December 31st into year end. Everybody will mark up their portfolios, take a deep breath. Everybody will be happy. I'm not looking for a monster rally into year end either. I think there are enough dark clouds on the horizon to where I'm just looking for us to bounce a little bit, get within striking distance of the high, recover some of this selling in here, tick, 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 time premium decay. That's why I favor selling out of the money bullish put spreads today or tomorrow once that support level is established. I believe that SPY 452 is going to hold into year end. You've got the 100-day moving average coming into play, not far below that. So I think that also is going to provide support. We'll put the 100-day moving average up so you can see where that comes into play. Put the 50-day up. So 452, I think, is going to be held through year end, worst case scenario. The more likely scenario is a bounce after today's selling after the FOMC meeting, and we come somewhere near the high. The main point is that on this drop and keeping yourself a long ways away from that 100-day moving average, that's what you'll be doing on the strongest stocks. And that's why you want to sell out of the money bullish put spreads for swing trades, take advantage of accelerated time premium decay, give yourself that cushion. So let's see if we can find a bullish stock or two. I've shown you some bearish ones. I've shown you any stock in this list is going to be a decent short. Let's take a look and see if we can find some that might set up well for a bullish put spread. By the way, everything I'm showing you, and I had somebody mention this to me, everything I'm showing you is available in Option Stalker, real-time quotes. We have 3 brokerage firms that we interface with, Ameritrade, Interactive Brokers, and Tradier. Fantastic resources built around finding heavy volume, relative strength, relative weakness, and then also our proprietary 10p indicator. So these are some of the stocks that are doing really, really well today. I've got a few. CNC is one of my favorites. Remember from my video 2 days ago, Monday morning, I showed you this stock right here. Said, hey, you know what? This looks like a really good one. Downward sloping trend line, broken to the upside, closes on its high, breakout through horizontal resistance, heavy volume. Ding, 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 ding. Look at that baby go. CNC could be my long of the day. I really like that price action, and you'll be able to see the relative strength. Just do a quick overlay of the SPY. You can see market down, 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 stock up, up, up. Well, if you're looking for a market low in here, and you think, oh, this is where we're going to get that bounce for whatever reason, and you buy here, uh-oh, you're wrong on the market, but because you were in the right stock, you were able to make money. And honestly, I mean, if I'm being honest with all of you, if I got this next leg of the market decline and I saw that it was heavy and I was able to take gains in here, I would. I wouldn't mess around with it because I'm on the wrong side of the market. At any time, even the strongest stocks can start to crumble. So what relative strength gives you in this case is it gives you cushion, it gives you buffer to be wrong on the market. If I'm trading S&P futures and I start buying this bounce right in here, and the bottom falls out, guess what? I'm going to have my head handed to me. That's the advantage of trading relative strength versus the S&P 500. There is a defined edge. There's a distinct edge that I've been trading for almost 20 years now, and it continues to exist. That's why you hear me preaching about it all the time. So a lot of novice traders, oh, I want to trade the S&P E-mini, oh, the MES micro contract, oh, this is so awesome. The liquidity is great. Look at the leverage. You're going into the toughest arena that there is, and you're going to be doing battle with giants who have the upper hand. So very, very difficult to make money trading futures. Can it be done? Yes. I can tell you personally, it took me a lot longer to learn how to trade S&P futures than it did to trade stock. Get your market bearings. You need to have those. Those skills are super important, but instead of trading the S&P, you want to focus on stocks with relative strength or weakness. They're breaking through technical resistance on heavy volume. So you hear me preach it time and time again. So I like that. ESCC, we were in on this yesterday. I bought it yesterday. I love the fact that it was holding up well relative to the market. Market down, down, down. Stock up, gap up, holding all those gains while the market is getting trounced. As soon as the market finds a bid, see you later. Today, same deal. Down, down, down. Stock compressing. Market finds a tiny little bid in here. Tick, 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 tick. Look at that baby go. And I know traders in the chat room are all over this stock right now because it's been at the top of one of our lists. Heavy buying. Very easy. I'm going to click through a couple of other stocks here. A lot of bottom bouncers in here. So I wouldn't do anything more than to day trade those. AA trying to get through resistance. Uber, another nice bouncer, had some decent relative strength this morning. Nothing going there, too choppy. Lyft was trying to get going also. So I don't see anything too compelling in that list. mRNA. Pfizer's another one I really like. This is not bad. You can see how it's bouncing here, getting through the 200-day. But this is in the lower right-hand corner, so I'm not overly excited about that. Goldman Sachs, the banks are probably going to do pretty well today because everybody's afraid that the Fed's going to hike rates sooner than later. And so bank stocks have a bid because banks will perform well in a rising interest rate environment. Going to go into bull run. I'm just looking to see if anything strikes a chord with me. Pfizer's been one of my favorites. You know that. I've highlighted that a few times. And I might put that chart up also. Amgen still has the 100-day moving average in the way. If I don't have chance for liftoff, I don't really want to be in the stock. And this stock has a lid on it, so I'd be very careful with that one. I'm going to go into pop bull, see what we've got shaking there. VXX, of course, with the market down. I'm going to go into pop plus bull. What's that? The plus is this was on the list yesterday and you ignored it. Here it is again today. This is your last shot to take a look at these stocks. PG for a consumer staple stock, really getting a little bit too hot for me. So I wouldn't be crazy about that. ABBV I've highlighted recently. I do like that. PFE. PFE is going to be my pick of the day. CNC, TSN, PFE. Those are all really good stocks. Look at TSN. Beautiful breakout here through horizontal resistance, going on heavy volume. CNC, we already looked at that one. Yes, upper right-hand corner. Love it. PFE, super strong. Downward sloping trend line. Breach to the upside. Bullish flag formation. New all-time high. ABBV, see you later. Those are your longs. That's how we do this. Please leave your comments. Those comments help me determine what I'm going to include in the videos. Today I want to spend a lot of time on the S&P 500 and the types of formations that I'm looking for and how we traded it. But your comments help me focus in on the content in the future. And by all means, please tell your friends about this YouTube channel. It's free. I'm trying to grow my subscribership. I hope to reach 30,000 next year. You're the only ones who can help me do that because I do not advertise. You will never see an ad for one option anywhere. My business is 100% word of mouth, and it's all because people have finally had enough to where they've seen trade after trade after trade work, to where they come in and they take the trial and they go in the chat room and they go, oh my God, this is not a bunch of BS. These guys are actually doing this. Please take the free trial. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.